Hi, it's Stuart Sutton. Of course, hope you're having a great day. We're going to address one small thing right now. One small thing. Actually, probably couldn't be described as small. What we're going to talk about is interest rates. They have gone up. We're going to give you some options as to how you can manage that. We're going to give you 3 different options so that you can consider, all right, how would I want to proceed if I were going to buy a house? Right now, we're going to jump in and show you exactly what your options are. So with interest rates having increased as much as they have, as quickly as they have, we've got a dramatic payment issue to deal with. For example, if you're thinking about buying an $800,000 house in our market, you have a payment that's about $866 more per month with today's interest rates compared to 6 months ago. Now I'm going back exactly 6 months. That rate versus today's rate. And when I look, today's rate was just shy of 7%, 6.875. You might be able to do a little bit better, might not be able to do quite as good, depending on your situation, of course. In the lending environment today, there are many variables to look at. There was a time when agents could really help qualify buyers, but that day is long gone. Lenders need to qualify and approve buyers so that you know exactly where you stand. That's the best first step you can take. But if you're planning on buying an $800,000 house, your payment is $866 more today than it was 6 months ago. So how do you manage that? Well, you might decide, let's go ahead and make that increased payment and just budget accordingly. The second option is to lower your expectations, decrease the price home you're looking for to about $650,000. Now, if you lower your expectations and look at houses around $650,000, will they be that different from a home that's $800,000? Well, yeah, they will be. But in this market, you can still buy a terrific house, a beautiful, lovely home for $650,000. There's absolutely no doubt about that. So you can look at homes for $650,000 and go that route. Now, I'm assuming the same down payment. If you had the down payment for the $800,000 house, I'm assuming you'll use it for the $650,000 house. Now, there's another option. We've seen the renewed interest in what are called adjustable rate mortgages. Now, a lot of people say, well, I would never do that. And that's absolutely fine. But adjustable rate mortgages can be fairly risk-free depending on the type that you get. If you look, for example, at rates today, you'll see that a 7-year adjustable rate mortgage is about 6.25%. So with an adjustable rate mortgage at 6.25%, your payment would be $246 less. So you're making up some ground there. Another option is to use that adjustable rate mortgage to allow you to buy more home. So another option is to increase your price to about $685,000. Now, what's the difference between a $685,000 house and a $650,000 house? Well, that's for you to kind of figure out whether it's worth it when you go out into the market and look at homes. But keep in mind, very few people are paying asking, certainly not above asking anymore. I've seen contracts start to normalize. What that means is that as a buyer, you're typically going to ask the seller to pay for title insurance. You're typically going to ask the seller to buy you a home warranty. You're typically going to negotiate things like the survey. In the frenzied market we're in, you just have to set that aside. There was not normal negotiating in that market. We're back to a market where you can typically negotiate on a normal level basis. Hope that makes sense. So with increased interest rates, what are your options? Well, one of them is to just make the higher payment. Another one is to lower your price point so that you can have the payment that you expected in the first place. The third is to use an adjustable rate mortgage to either lower your payment or to increase the price house you're going to buy. So you've got some options. They're not the best options maybe ever, but keep in mind, interest rates are expected to continue to edge up. So manage accordingly and look for options because there are options in the market today. Now let me finish up by telling you that I did do another video, and that is about equity. Bottom line is this: home prices, although they seem to be settling and everyone thinks they are, still did not show a decrease in closed prices in September. We'll see what happens in October and November and December, but as of September, closed home prices had still not dropped. We'll continue to watch it and make sure you're aware if and when that does happen. But if it doesn't happen, that means that equity is still continuing, and buying a home is absolutely not a bad idea right now. Now, this next video actually covers your equity position and what's going on in the market right now. Hope to see you there. It's pretty informative. I've gotten some great comments on it.